Buckle up, everyone, because today we're diving into a story that could completely rewrite the rules of the global economy.
Wow, yeah, that's a bold statement.
Well, I think it's warranted.
Okay. I'm intrigued. Tell me more.
It all revolves around Bitcoin and a seismic regulatory shift that's poised to unleash a tidal wave of institutional investment.
Institutional investment. So we're talking the big players.
The biggest banks are champing at the bit to get involved. BlackRock's making some seriously bold predictions, and there are even whispers of sovereign wealth funds.
Sovereign wealth funds, those giants of finance.
Exactly, those giants thinking about making a huge splash in the Bitcoin market.
This is fascinating because it's not just like some tech bros getting excited about the latest shiny object, right? This feels different.
It does feel different.
The source material points to a fundamental shift in how the financial establishment views Bitcoin. And it seems it all comes down to a key regulatory change in the U.S.
Right, a change that's basically blasted open the doors for banks to dive headfirst into the Bitcoin market.
At first, that's a great way to put it.
So let's break down this regulatory change because it sounds like the key to unlocking this whole story.
Definitely.
The source material mentions something called SAB 121.
Yeah, SAD 121.
What was that exactly, and why was it such a roadblock for banks?
So SAB 121 was essentially a directive from the SEC, the Securities and Exchange Commission.
Okay.
It forced banks to treat Bitcoin as a liability.
A liability?
Yeah, like imagine having to account for Bitcoin as if it's a potential burden.
Instead of an asset.
Exactly. It made holding Bitcoin super risky for banks.
Essentially shutting them out of the market.
Pretty much.
So it wasn't even a law passed by Congress.
Nope.
Just an SEC directive.
Right, an SEC directive that had this huge impact. It's interesting because it seems like there was a lot of debate about whether the SEC even had the authority to do that.
You're right. There was a lot of pushback.
The source material highlights how controversial SAB 121 was.
Banks were not happy.
Many argued that it was a total overreach of the SEC's power. You can imagine their frustration.
Watching the Bitcoin market grow while they're stuck on the sidelines.
Exactly. Missing out on all the action.
It sounds like there's a real political tug-of-war going on.
Oh, absolutely.
You had the Biden administration Senator Elizabeth Warren, former SEC Chair Gary Gensler,
Big names.
all seemingly taking a cautious approach to crypto.
Yeah, the source material suggests their perspective was shaped by concerns about volatility.
And the potential for illicit activities.
Right. They saw SAB 121 as a way to mitigate these risks.
And maintain stability in the financial system.
Makes sense.
But on the other side, you had the banks.
Eager to get in on the action.
They saw the potential profits slipping away and were pushing hard for a repeal of SAB 121.
They weren't afraid to fight for their piece of the pie.
It seems not.
Yeah,
And for a while, it looked like they might succeed.
it did for a while.
The source material recounts how Congress actually voted to repeal SAB 121 back in 2023.
Yeah, that must have felt like a major victory for the pro-Bitcoin camp.
Huge victory.
But then
President Biden swooped in with a veto.
talk about a plot twist.
Talk about a dramatic turn of events. It seemed like the battle lines were drawn.
The future of Bitcoin in the U.S. was hanging in the balance.
Absolutely hanging in the balance. The 2024 election.
The 2024 election proved to be the turning point.
A pro-Bitcoin administration with Trump at the helm,
Swept into power.
leading to a dramatic shift in the regulatory landscape.
Gary Gensler, a known Bitcoin skeptic, removed as SEC chair.
And SAB 121.
Swiftly repealed.
So just like that, the biggest roadblock to institutional Bitcoin adoption was gone.
Like a damn raking.
Banks were finally free to dive into the Bitcoin market.
And dive, they did. The source material even has quotes from CEOs of major banks like Goldman Sachs and Bank of America.
Who had previously expressed interest but were held back by regulations.
Exactly. Once SA 121 was gone, they were ready to jump in.
But not everyone was quite as gung-ho, right?
Right. The source material also mentions Morgan Stanley taking a slightly more cautious approach.
Working closely with Treasury and regulators.
Yeah, wanting to make sure all their ducks are in a row before making any major moves.
Even their cautious approach underscores the fact that the institutional world is taking Bitcoin seriously.
No longer a fringe asset to be dismissed.
So we've got banks free to enter the market.
Check.
But what about the other big players in finance? That's where BlackRock's prediction really caught my eye.
Oh, yeah, BlackRock. What did they have to say?
Well, for context, they're one of the biggest asset management firms in the world,
Huge.
managing a staggering $11.5 trillion.
Wow, 11.5 trillion.
And then they dropped a bombshell.
Wait on me.
They recommended a 2% Bitcoin portfolio allocation for investors.
2% from BlackRock. That's not just a suggestion.
It's practically a mandate. It signals a major shift in how they view Bitcoin's role in a diversified portfolio.
And what's fascinating is their recommendation is based on a deep analysis of Bitcoin's potential in this new regulatory landscape.
So they're not just jumping on the bandwagon.
No, they're making a calculated bet on Bitcoin's long-term potential.
And let's not forget the math. If all major institutions followed BlackRock's lead and allocated just 2% of their assets to Bitcoin,
Go on.
we're talking about a potential price of $700,000 per coin.
That's a mind-boggling figure. It highlights the sheer magnitude of the potential capital inflow we're talking about.
It's huge. And it doesn't stop there. The source material also mentions Larry Fink, BlackRock CEO, hinting that sovereign wealth funds
Some of the biggest investors in the world.
are even considering a 5% allocation to Bitcoin.
Now we're talking about a potential financial earthquake.
Exactly. And this brings us to a crucial point. This isn't just about the price of Bitcoin going up.
Right. It's about a fundamental shift in the global financial landscape.
We're witnessing the early stages of institutional adoption.
And the implications are far-reaching.
So it's not just a tech story anymore.
Not at all. It's a story about power, money, and the future of finance.
Precisely. And as we move forward in our deep dive, we'll unpack these implications in more detail, exploring how this institutional wave is reshaping the Bitcoin ecosystem and potentially redefining the global balance of power.
I'm ready to dive in.
This is already feeling like a financial thriller, and we're just getting started.
I know, right?
But before we dive into the next part,
Okay.
let's recap what we've uncovered so far.
Sounds good.
We've seen how a major regulatory roadblock was removed.
Paving the way for banks.
We see major players like BlackRock making bold predictions about Bitcoin's role in a diversified portfolio.
And we've gotten a glimpse of the massive potential capital inflow that could be headed Bitcoin's way.
Exactly.
It's huge. We've also seen how this story is about so much more than just the price of Bitcoin.
So much more.
It's about a fundamental shift in how the financial world views this asset class.
And the potential for it to reshape the global financial landscape. And in the next part of our deep dive, we'll explore these implications in more detail, looking at how this institutional influx is likely to play out in the coming years and what it might mean for the future of finance.
The future of finance, it's a big one.
So stay tuned, because it's only going to get more interesting from here.
I can't wait.
Welcome back to our deep dive into the institutional Bitcoin era. Last time we saw how a major regulatory shift opened the floodgates for banks and financial giants like BlackRock to jump into the Bitcoin pool.
Yeah, it's a whole new ballgame now.
It's clear that we're on the cusp of something huge. But what does this all actually look like in practice? How will this influx of institutional capital change the Bitcoin landscape?
It's like watching a quiet pond suddenly get hit by a massive downpour. The pond is still there, but the whole ecosystem is about to change. One of the first and most obvious changes will be the sheer scale of capital flowing into Bitcoin.
Right, we did some quick math last time, and just a 2% allocation from major institutions could push Bitcoin's price to astronomical levels. But beyond the price fluctuations, what other shifts can we anticipate?
Think about the players involved. Institutions like BlackRock aren't known for their, casual speculative investment.
They're not messing around.
Exactly. They're bringing a whole new level of sophistication and professionalism to the Bitcoin market.
So it's like Bitcoin is graduating from the schoolyard to the big leagues with all the rules and regulations that come with it.
Exactly. This institutional involvement will likely lead to a greater emphasis on security transparency and regulatory compliance. We're going to see more robust financial modeling, risk management frameworks, and a push for standardized practices across the industry.
It sounds like this could be a positive development for Bitcoin's long-term legitimacy. Greater stability and trustworthiness could attract even more investors, further fueling its growth.
That's one possible outcome. But remember, this shift towards institutionalization also raises some important questions. As Bitcoin becomes more integrated into traditional financial systems, does it risk losing some of its decentralized anti-establishment character that initially drew so many people to it?
It's the classic dilemma of any movement that gains mainstream acceptance. Does success ultimately lead to compromise? That's a question that the Bitcoin community will need to grapple with as this institutional wave unfolds.
Absolutely. And another potential challenge is the influence these institutions could exert over Bitcoin's development and governance.
Hmm.
If a small group of powerful players controls a significant portion of the Bitcoin market, does that undermine the decentralized nature of the system?
It's a valid concern.
Yeah.
Bitcoin was designed to be a decentralized peer-to-peer network, free from the control of any single entity. But as we've seen in other industries, consolidation of power can happen gradually, even in systems that were initially designed to be decentralized.
Precisely. It's a tension that the Bitcoin community will need to carefully navigate in the coming years. Striking a balance between institutional involvement and preserving Bitcoin's core values will be crucial.
So we've got this fascinating paradox unfolding. Institutional investment brings legitimacy, stability, and access to vast resources, but it also raises concerns about centralization and the potential erosion of Bitcoin's original ethos. It's a delicate balancing act.
And it's not just about Bitcoin itself. This institutional influx has the potential to reshape the entire financial landscape. Remember that 50-year economic cycle we talked about? Well, we're right in the thick of the institutional adoption phase. If history is any guide, this phase is typically characterized by rapid growth innovation and a surge in new products and services.
It's like the California gold rush, but for digital assets. Everyone's rushing in trying to stake their claim and capitalize on this emerging market.
That's a great analogy. And just like the gold rush, there will be winners and losers. The players who can adapt to the changing landscape, anticipate trends, and innovate effectively will be the ones who thrive.
So it's not just about riding the wave, it's about learning to surf skillfully and strategically to navigate the inevitable ups and downs.
Exactly. And for those who can master the art of surfing this institutional wave, the potential rewards are enormous. We could see the emergence of entirely new financial products and services built on Bitcoin's decentralized infrastructure.
So we could be on the verge of a financial revolution with Bitcoin as the catalyst.
Oh.
It's both exciting and a little bit daunting to think about the potential implications.
It is. And it's important to remember that we're still in the very early stages of this transformation. The next few years will be crucial in determining how this institutional wave plays out and what kind of financial landscape emerges on the other side.
This feels like a major turning point in history.
Yeah.
And while the future is always uncertain, one thing's for sure, it's going to be a fascinating journey.
Absolutely. And in the final part of our deep dive, we'll zoom out even further and explore the broader implications of this institutional Bitcoin era. What does this mean for the future of finance, the global balance of power, and even the way we think about money itself?
This is where things get really interesting, folks. Stay tuned for the final part of our deep dive, where we'll explore these big questions and attempt to make sense of this rapidly evolving landscape. All right, we're back for the final part of our deep dive. We've been on quite a journey tracing the evolution of Bitcoin from a fringe asset to a force to be reckoned with.
It's been wild, hasn't it?
It really has. Now let's step back and contemplate the truly profound question. What does this all mean for the future? Not just of finance, but potentially of the global system as we know it.
It's a big one.
It is a big one. The source material offers some intriguing clues.
Okay, lay it on me.
Well, we've seen how institutional adoption is changing the game.
Right, changing everything.
But what happens when these tidal waves of capital truly reshape the landscape?
That's the million-dollar question, isn't it?
It's easy to get caught up in the day-to-day fluctuations of the market. But what we're really talking about is a potential paradigm shift.
A paradigm shift. I like that. And one of the most compelling areas where this shift could play out is in the global balance of power. For decades, the U.S. dollar has reigned supreme as the world's reserve currency.
But could Bitcoin disrupt this dominance?
That's a really interesting question. It's not as far-fetched as it might seem.
Really?
Remember, the source material highlights that Bitcoin's inherent nature, decentralized, borderless, and resistant to censorship, makes it fundamentally different from any currency we've seen before.
So it's not just about another currency competing.
No, it's about a completely different system.
One that doesn't rely on the same power structures.
Precisely. And as more countries and institutions embrace Bitcoin, it could gradually erode the dollar's grip on the global financial system, leading to a more multipolar world.
That's a fascinating thought. But what does that mean for everyday people? How would a world where Bitcoin plays a larger role actually impact our lives?
Well, one of the key promises of Bitcoin is greater individual financial sovereignty. The source material underscores how Bitcoin enables people to have more direct control over their money without relying on traditional intermediaries like banks.
So it's like a shift from centralized control.
To individual empowerment.
That sounds pretty good to me.
Imagine a world where you can send money to anyone, anywhere in the world, instantly and with minimal fees regardless of borders or government restrictions.
That's the kind of freedom and flexibility Bitcoin offers.
It's powerful stuff, especially for people in countries with unstable economies or limited access to traditional financial services.
I can see that. But let's be honest, with all this talk of revolution and disruption, aren't there risks involved? What about security concerns and the potential for Bitcoin to be used for illicit activities?
Those are valid concerns for sure. And the source material acknowledges the need for thoughtful regulation and oversight as Bitcoin becomes more widely adopted.
So it's not about throwing out the rule book altogether,
No, not at all.
but rather about adapting it to this new reality.
Exactly. We need to develop frameworks that ensure security, transparency, and accountability within the Bitcoin ecosystem while preserving its core values of decentralization and individual empowerment.
It sounds like we're heading into uncharted territory,
We are.
and there's no roadmap for navigating this new financial landscape.
That's true. But that's also what makes this so exciting. We're witnessing the birth of a new era, and it's up to all of us to shape it responsibly. The choices we make today will determine the future of finance and potentially the future of our world.
That's a powerful thought to leave our listeners with. We've covered a lot of ground in this deep dive,
We really have.
from regulatory changes to institutional adoption, from the potential for global disruption to the promise of individual empowerment.
We've seen how Bitcoin is challenging the status quo, forcing us to rethink our assumptions about money, finance, and power.
And while the future's uncertain, one thing's for sure, it's going to be an incredible journey.
I agree. So stay curious, keep exploring, and remember, the future of finance is being written right now, and you have a role to play in shaping it.
Couldn't have said it better myself. Thank you for joining us on this deep dive. We hope it sparked your curiosity and inspired you to continue exploring the fascinating world of Bitcoin and its potential to transform our world.
It's been a pleasure.